Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Jeff Booth. How you doing today, Jeff?
Great. Yourself, Kirk?
Great, great. Well, I had wanted to bring Jeff on. Jeff actually has a great philosophy, which in many ways echoes my own, which is why I want to bring him on because I think he'll do a better job of illustrating than I will. And I've also had a few requests for him, and so Jeff, maybe you could tell us a bit about your background.
Background, I would just say I'm an entrepreneur. I'm a technology entrepreneur. Built a number of uh, uh, significant companies in the dot-com era. And now I invest on top. I run a firm called Ego Death Capital, which invests on top of Bitcoin. But getting there, I wrote a book called that turned into a bestseller that called The Price of Tomorrow: Why Deflation is Key to an Abundant Future. And I would say the reason for writing that book is what I was seeing in the technology landscape.
Nice. Um, so based on your background, obviously you have a background in technology, which is a big part of the book. So tell us, I mean, a large part of the book is about the concept of deflation.
Yeah.
So maybe you can start by telling like what is deflation and how does it impact the economy?
Just that.
Or inflation. You could talk about the
Yeah. So
concept of,
yeah. So
yeah.
let's just actually start level set because I think most people are really confused by this concept. Just the natural state of a free market is deflation, and and most people, when I say that, will nod their heads. Yep, that makes sense, because we don't use things that give us less value. We choose in the market. Every single person chooses things that give them more value, and the free market attacks things to create more value. And if the entrepreneur doesn't create more value, they go broke. So just those two things would make sense, that the free natural state of the free market is deflation. If you add and simply what that would mean is um, you get more for less every year as things compete for you. Prices fall for you every year on everything you buy. That's what that would mean. Now, if you add technology to that concept, and remember, technology is just a thing that we put a name to, that entrepreneurs create, or and if you add technology to that, then you have, and technology is moving exponentially. That should mean exponential deflation. Inflation is the opposite. Inflation is when money supply increases, and that trickles across the economy, and goods get more and more expensive. What few people understand is the inflation is, you could say, so the inflation is unnatural. Deflation is natural. Why do you hear that inflation is required for a productive economy? Why do you hear that, which is quite literally a lie? Because it is required for a debt-based to credit-based economy. Because if you allowed deflation from a credit-based economy, the debt would get more expensive in real terms, and you couldn't pay it back.
So let me ask you this because this comes up a lot. I mean, I agree with a lot of your sentiments, but one of the reasons that, and this wasn't talked about in your book, which is why I wanted to ask you. Um, I have a background in economics, and one of the things I talk about for the reason for inflation is because it causes the velocity of money to pick up and flow faster through the system, which if you had deflation would cause people to just sit on their cash because that would be the better investment as opposed to investing in companies and technology and increasing the benefit of society. So what do you say to that? How does that play into the picture?
Okay, a whole bunch of things, but don't. We'll keep at this until you're satisfied with the answer.
Okay.
The number one, that's not how you make choices. So think about your iPhone or your TV. You buy things even if they fall in price and get more valuable. So it's patently false that you wouldn't buy things. You'd still buy food. You would still buy all sorts of things. um, even if they fell in price, because you do today. Um, the other side of that argument is it says I only make it, like if you chase that to first principles, it says I only make investments because my money is determined to lose money. Right? That's the only way, and that's not true, right? So today, I run a firm called Ego Death Capital. And Ego Death Capital invests in on top of Bitcoin. I expect the IRR in Bitcoin over the next 15 years to be 45%. So why would I just not hold Bitcoin? Because I think I can return a higher IRR by investing in companies that are building value on top of this protocol that then that drive like the early internet, and hold their balance sheets in Bitcoin by providing value there. It's the same reason you make investments anywhere. You make investments to beat a hurdle rate. So if you have an unnatural hurdle rate that's caused by manipulation of money, you just have more misallocation of capital.
So if I look at, for example, if I look at a period like the 70s, right, where or late 70s, where interest rates were really high, so like 15%, and I could invest in quote unquote guaranteed 15% money by the government, in air quotes for you audio viewers. But if you can get that versus invest in a company where it's more variable, um, why wouldn't I just sit on that cash? Why would I invest it into a company?
Because you can't, right? That's why you did the air quotes. So what was happening in the 70s is financial repression to try to make the debt to GDP smaller. And you can't beat the that financial repression. So 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 then people go out on the curve and they try to invest in other things. That's why at the end of the 70s you had a huge housing bubble. Um, uh, because of that same thing. You're trying to invest to beat an unnatural hurdle rate, that is caused by the government, and you have misallocation of capital everywhere.
Right, which is what we have now.
Misallocation. Of course, because the
Yeah.
inflation is derived from governments manipulating money supply. So if governments are manipulating money supply and you can't figure out what to hold long term value in, how to protect your money from losing money, and that's what it is, then you create all these short term gimmicks to try to do that, and businesses can't make long term assessment because they don't know the true, say, risk free rate, because the entire system is insolvent. So of course you have that today.
So do you think that going down the interest rate path, do you think that so in my example of interest rates, right, you could buy, let's say, a 10% bond and we have deflation, that bond will go up in value. But where do you think if we had deflation, interest rates would be?
So,
Because,
so,
go
so
ahead.
yeah, so this is a really important piece. The so the cause of the rise of the debt is the deflation I'm talking about.
Hmm.
And so you have to first increase debt. Remember, in my book, I wrote that in the preceding 20 years, you'd increased debt by 125 trillion or 185 trillion to increase GDP by 46 trillion. And then I forecasted that that had to go way up. So today we're at about 400 trillion, only 4 years later. So we went from 185 of that 250 trillion came in the preceding 20 years. And now we have another 150 trillion in the last 4 or so years to debt. If you tried to pay back that debt at $1 a second, take 12,873,000 years to pay back. It's already insolvent. And you have to just keep saying that over and over, because the only reason you spend your time in that system is you believe it's not insolvent. Now, how does it gain solvency? It can only gain solvency through financial repression, by stealing your money, by creating a higher rate of inflation. So if you increase bond yields, which could happen, right? But it would be the market driven force. If bonds went to 10%, and you had a deflationary spiral, then the debt becomes due immediately because you can't pay. It becomes insolvent faster. It's a credit event, and the credit fails. And so the bond that you think is risk free at 10% is loaded with risk, loaded with risk. So all of the credit, all of that 400 trillion is already insolvent. We just act like it isn't because we know governments have a backstop and they'll print money. Then you have to ask yourself, where does that printed money comes from? And it comes from you. So in other words, the inflation rate has to be higher, has to be way higher to be able to cure the insolvent debt.
So it kind of brings up the point. We don't have many examples of deflation in modern times. I know prior to the creation of the Fed, we had inflation, deflation all the time, like a natural ebb and flow. And you look back and it looks very volatile, even though it was probably more normal. Um, but we really only have one major example of deflation, which is Japan. So can you talk about that? And because we are where we are now, like, we're not going to change where we are now, but where Japan is, I want to kind of take us from where we are now to where we could be and kind of bridge that, what that looks like. So can you talk a little bit about Japan, like what's happened and how that's all played out?
Yeah, and any single country within a global context that you're talking about in a short time frame, you have to first zoom out and remember what we're actually talking about here is kind of moving uh, pieces like a which snowflake causes the avalanche, and all of these are part of the avalanche. Part of these are all these are part of the snowpack. So so Japan again has one of the highest debt to GDPs, aging country, and technically insolvent. And so they've been trying this. They've been trying this. It's one of the only currencies that hasn't failed yet when they get over 130% debt to GDP. So so it will fail. The question is when. Is it this year, next year, 5 years from now? These things can go on for a lot longer because it's connected to the US system as well. Um, and so, yes, they've had deflation or long-term deflation since kind of their 89, since the bubble in Japan, which Japan was an export country at the time. And at the time, I remember hearing like the bubble and people saying how Japan would overtake the US dollar. And similar to how a couple of years ago they were saying China would. But in moving from exports to a more balanced country, you can run that model for a long time while you're because it keeps your labor cheaper and US becomes the buyer, because the US has to keep its labor higher, and you'd force your prices down through currency revaluation and lower currency prices, similar to Japan. So you become the export nation to the world, and then the export nation moves from Japan to other countries and does the same thing over there. All the while, US essentially hollows out its manufacturing base, and now um, and now moving into, let's say, its military industrial complex base, because it has to have higher labor costs. Somebody has to be a buyer, somebody has to be a seller, and all over the world, that trade balance has to equal zero. So if you manipulate your money down, or if the U.S. Has a high dollar, high dollar at the expense of your lower dollar, what you could say is the U.S. is able to strip mine the world through monetary policy. You could say that you could keep raw materials and labor down. So this is a global scenario tied to a strong U.S. dollar, and it can go on for a can go on for a long time. Uh, that's why talking from within the system just confuses people, because everybody is measuring from within the system, and they're talking about Japan, they're talking about this, they're talking about what's happening in all of these countries where you keep seeing currency revaluations. It just hasn't happened in Japan yet. But look at Turkey, look at Venezuela, look at Egypt, um, and and each time that happens, all of those countries' labor gets cheaper. And what do they want? They want more US dollars. US dollar gets stronger. Then the US dollar prints, and it continues on. I tend to look at this as what would it look like from a system outside the system we're talking about? Because you couldn't measure this problem from within the system we're talking about. So what does it look like from a system like Bitcoin, which is decentralized and secure and completely outside the system? And what it looks like is all prices fall forever. So measured in Bitcoin, what's actually happening is prices of everything are falling forever. An example of my house, it measured in Canadian currency went from 1.4 million to 2.1 million in the last 4 years. But measured in Bitcoin, it went from 300 Bitcoin to 22 Bitcoin in the same 4 year period. And 4 years ago, 4 years from now, measured in Bitcoin, I suspect it's going to be worth about 2 Bitcoin. So prices fall to the marginal cost of production in economics, period. If you had a system that was stable, that you couldn't print more money, and was decentralized and secure, so it couldn't be hacked, then that system would price deflation, as we're talking about. It would price the real market, and it wouldn't care what governments did to print more pieces of paper. It would respond to the real market.
So let me, we can tiptoe into Bitcoin right now because I had a bunch of questions on that. But um, I like your frame of kind of pulling us out of the existing system. It does present a problem because we are in our existing system. So you have to bridge that, right? If you have this ideal scenario of where we should be compared to where we are, it's like people who say we should end the Fed. I agree. But how are you going to do that? And what does the transition look like? And who's going to fill the vacuum? Like, so there's always these questions of the transition. But before we get into that, I want to, or we could touch on that if you want. But did want to talk about a Bitcoin as an example because I think it's a modern day example of like what you're talking about. But how would that differ from something like housing or gold? I mean, we do have, I mean, yes, there'll only be 19.5 billion Bitcoin, and I think I don't know the numbers off the top of my head, but there's somewhere around 3 million that are basically floating, and the rest is kind of parked. So, how is that going to change if I mean, it just means that Bitcoin, the price of Bitcoin is going to go through the roof because we have very little adoption and we have a growing global population. And it just, there's other factors other than just use, right? There's other major macro factors that affect price other than just like usage, correct?
Yeah, keep coming back to, and I'm going to give you a framework to help see this, but I think for your listeners, keep coming back to the natural state of the free market is deflation.
Mm-hmm.
Just keep, because, and I know when you nodded your head, you know that's true,
Yeah,
right? Prices
absolutely.
fall to the marginal cost of production. Just as a byproduct, what that means is anything in the existing system is not practicing economics. It's a control system under the guise of a free market. And let that sit with you for a while. And what would that control system, as it has to steal more money from you, look like over time? What would politics look like if it was just a control system? It wasn't a democracy anymore, because more of the money comes from inflation than it does from taxes. And you don't have a vote in the inflation rate. Remember, the inflation rate should not be from zero. It should be from the implied deflation rate from the free market. So, so just let that sit for a while and understand why I say keep coming back to the natural state of the free market is deflation. Because if you're arguing otherwise, you're arguing for a control system. And as technology moves faster, and AI and robotics merge, that control system will control you utterly and completely. So 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 now the framework on Bitcoin, a couple things, and I think just because uh, it's so few people are deep enough on this to really understand what is happening. When I think about Bitcoin as a framework, I don't think about it. Like there's all different kind of prisms to look through it, but I think about it as a decentralized, permissionless, secure protocol, bounded by energy, creating energy abundance by its very nature. Protocols are very different than technologies. Protocols come around rarely, and the base layer of the protocol does very little. And it has to harden, it has to ossify, because if the base layer fails, everything fails on top of it. And they come along in layers. So the internet is an example of a protocol, and TCP/IP is the first layer of that protocol, developed in the late 60s by DARPA. And it wasn't until 1989 that you had the HTTP that strung that protocol stack together on layer four, and entrepreneurs created what we now see as the internet. What's actually driving this podcast, what's driving your phone, that same protocol stack. So you can't see what's available on the next level of the protocol. And this is one of your questions. This is why I'm getting into it, until it's already there. So the base layer of the protocol, just if you simplify, say it's decentralized and secure, and it's tethered to energy. Energy is life. We need more energy on this planet. We need abundant energy on this. And this gives us a path, an economic free market incentive to chase energy all over the world, which is what's happening. It's part of the reason why it's more and more decentralized and secure. And then the nodes like I run protect that and protect all the rules that were agreed to. And it's impenetrable, because if it wasn't impenetrable, in 15 years, if you think about all the governments trying to stop this, China trying to stop it, US through a whole bunch of things trying to stop it, all of the different hacks, it would have already been hacked. It would have already failed. It's stronger, more decentralized, more secure today. On top of that, coming in layers, the second layer right now has lightning and liquid as a second layer on top of that, which every 10 minutes come back down to that layer. What it gives, and I spend Bitcoin every day. I pay for things in Bitcoin every day. And so what it gives is unlimited velocity in money in the technology itself. Because I can spend that Bitcoin, it can move 40 times around the world in 10 minutes and come back to me. And so it doesn't require gaming, because gold had to be centralized, and you had to build a fractional reserve system on top of it because you couldn't trade it with speed. So it was centralized, and then you have this belief that you needed more money in the system so people would spend their money. And under the new tech, under a new protocol, just like a lot of people misunderstood what was happening in the internet because they were looking through their prior lens, they're misunderstanding what's happening here because they're looking through their prior lens on all of the history that they think economics needs to look like, because it's always looked like that.
Okay. I mean, that makes sense. I mean, so you mentioned that Bitcoin's IRR is 45% in the next few years. Why would and this holds true, human behavior is people who are really into Bitcoin and cryptocurrencies and understand it and the technology and all of it, they're not spending their Bitcoin because it's going to grow at 45% a year. So why would I spend something that's going up in value in comparison to what you're buying it with? And then if that's the case, then what's the point if
Okay,
people don't use it?
so let's go. So before, if that's the case, so you could imagine, I know what we're talking about here right
Hmm.
now, right? So I know this down to the sand. Why am I spending it? So when you say people, who do you mean? Right? Because I know this economic calculation, yet I choose with my time to spend in it, to acquire more of it, to build companies on top of it that will acquire more for it. So why would I do that if what you said is true?
That's the question I'm asking. 'Cause-
Yeah, because I can invest in companies that can create value for others and make more of it by creating value. Essentially, if you said the free market is deflationary, is naturally deflationary, and and the only thing pricing that is Bitcoin, then the only way to create value, and we trade with each other all over the world, and Bitcoin is providing a bridge to trade with each other all over the world on a free market, then wouldn't it make sense if you could invest in companies on top of that ledger that are creating value, that denominate their balance sheet in Bitcoin, that you could achieve venture type returns on top of a venture asset? That's why I do. And the more time I spend on it, the more opportunity I see. And if somebody wants to price their world from more pieces of paper because they think they're getting richer because the paper is becoming abundant, then they're going to be really hurt by this. But every single person on the planet has a choice, because it's an open permissionless system, to choose to spend some of their time in the new system, or more of their time in the more of the time that you're spending in the new system, the more you see it, the more opportunity there is. So I don't doubt what you just said, why so many people are living within the system, that that are that are stuck there, and their life is getting worse inside this, and they're wondering why this is getting worse. You use houses as an example. Houses used to be a utility, but when money is eroded in value and you can't save your money in the bank, you try to save your money in a house. And so money has so house has created a monetary premium that feeds back on itself, because it protects you somewhat from losing money in the bank. And so it makes complete rational economic sense that more people would put their money in houses, until Bitcoin came along. Because like I gave you that example, my house has fallen by a whole bunch in Bitcoin and will continue.
So your example of you're spending Bitcoin because you're investing in companies that are based on Bitcoin is, I think, a um, not a common reason. I mean, if for me or anyone else that's not in the space that you are, if I have a Bitcoin, I'm not going to go spend it on an iPhone or a pizza, because I'm just completely devaluing the fact that this is going to hold future value because of deflation.
Yeah,
So I guess
store.
my question was
Yeah,
more of other people, not you,
yeah.
because you're obviously an isolated case, but other people don't necessarily invest in the space. So why would they ever? Which it leads to the fact that they're not, because so much of the Bitcoin is stored. It's not used on a daily basis. There's a small float in comparison to the whole amount.
Yeah.
So yeah, if you
Store,
could address that.
yeah, store of value comes first. Store of value comes first before currency. That's typically what, as a new currency rises, to store of value is it leads a currency. But you're looking at it from a U.S. centric lens, where money supply has been relatively stable. Now, that relative stability might come at the cost of other countries that are further away from you, like Democratic Republic of Congo, or Malawi, or El Salvador, because effectively by this system, U.S. exports its inflation to other countries. Um, Now, think about all the people in those other countries that now are unbanked because of the same system, or they can't trade with each other because of the same system. They live in dictatorships. They can't do this. I can tell you because I've visited a lot of these countries, and I can tell you how fast Bitcoin is moving as a payment mechanism. And I don't, for me, I built about 120 person technology company in India, and trying to pay wire transfers every 2 weeks to my team was outrageously hard. So I started paying them in Bitcoin, and nobody could stop me. The employees wanted it. It was completely peer to peer. And so again, we trade with people all over the world to create more value. And now you have a medium of exchange that everyone in the world is equal on that medium of exchange. Now, if you're in the privileged area of the world, because and unfortunately it's exploitative to the rest of the world. But if you're in the privileged part of the world and your money is more stable, you'll see it last. But it's that you have a network effect growing, and I don't have to. In this, I'm not trying to convince you. What I'm saying is, if you look at the data, Lightning alone, Lightning on top of Bitcoin, so built on Bitcoin, every 10 minutes comes down to Bitcoin, that payment mechanism, it's growing faster than the internet did. So, so the use case is there. You just might not see it in your town yet.
So, I mean, I would imagine part of the adoption has to do with the difficulty to adopt it, right? As you said, we're in the early stages of the technology. Like in the internet, not everybody was using it. Just like people aren't using it now because, I mean, I remember 4 years ago I heard about it and I was like, oh, I got to try to. Actually, maybe it was 7 years ago now. I heard about it. I think it was 2017, and I tried to get it, and I was like, oh, get a wallet and tried to figure it out. It took me all weekend. I couldn't figure it out,
Yeah.
and I'm kind of like a geek with tech, and I was like, this is too hard. And I don't know how much easier it's gotten, but I imagine that in order to get that wide adoption, it has to be relatively simple because people are simple creatures and they don't. If it's not what they do for a living, they're not going to spend more than 5 minutes on it. So when does that in kind of a predictive ability based on the adoption rate, when do you think that will actually come to pass where people actually have an easy way to use it on an ongoing basis?
So I love the way you framed that, by the way, because do you remember? I remember specifically because I went into the internet early. Well, people were saying this is a joke, right? I can't even download a picture. Right,
The modem sound.
and exactly the modem sound and connecting and so. But if you could see what was happening with the network effect and the growth and entrepreneurs solving different problems, you could see this was going to change everything. This is the same thing we're talking about here. And when you're remember when you're having this much problem, and let's say your technology is proficient, you run an investing show, and you have an, a new protocol essentially repricing the world from it rather than and you are not there yet. Just think 99% of the people are behind you in understanding this. And now think about the opportunity, why I said we're investing in this space, to make this easier and drive adoption. So you don't have to convince you, so you don't have to use education to try to teach how the internet works. Can you imagine if it was just education? And so a lot of Bitcoin today is we're at such an infancy because people are still talking about how this works, and it's a change never seen in any history book. So it's confusing, and then people go and try to use it and they're scared to use it. That slows adoption. But the adoption is still, even with that slow adoption, you can see what's happening in if you measured in price and fiat terms, you could see but more important, if you measure price relative to Bitcoin, and if you measure the adoption rate of Bitcoin and Lightning and everything in this ecosystem, you can see how it's very, very early in the internet days, but it's inevitable. And so when I see those things, Kirk, I think, wow, there's the opportunity. There's the just like I saw early in the internet. There's The opportunity is to go fix those things to create technology that makes it easy to interact with.
Yeah, I mean, I've been certainly making the claim for a while that crypto or blockchain is where we are in blockchain is pretty much the early '90s, the internet. It's the same kind of thing.
And can I just clarify that? And please, for your listeners, uh, read an article that I wrote. It's on. I published it for free on my site, jeffbooth.ca, called "Finding Signal in a Noisy World," and read it. Read it over and over again. There is no such thing as blockchain or crypto other than Bitcoin. There is, but it's all a scam. All the entire. So I know somebody's not deep enough when they say blockchain or crypto, because there is no reason for a centralized database, and most blockchains are centralized databases. Only Bitcoin stands out as a utility that's decentralized, or that's a protocol that's decentralized and secure. And so, because we see technologies far more often than we see protocols, um, it's easy to get confused at what the difference is. And what's happening is you could create a whole bunch of money by scamming other by conflating blockchain or crypto and creating a new coin to create a whole bunch of damage to people. And that's so all of these other coins, they go through this parabolic rise. It's like a stock play, and then they fail for the same reason. Some fail more slowly, but I believe they will all fail just because of the design space of what this looks like at a underpinning of the foundation of what this looks like. So protocols are very rare. They don't come around very often. We see more technology, so it's easy to think, oh, the next cryptocurrency or the next blockchain is going to be better because people wouldn't because that would be easy to believe because we think in technology rather than protocols.
Yeah, I mean that makes sense. I mean, at this early stage of technology, I think we saw on the internet is there's a lot of early adopters and a lot of them fail and some stick around. But um, what about something like I know there's a lot of well, there's over 10,000 coins out there and a lot of them are garbage.
There's 20
There's
odd
20
thousand,
now. Wow, that's
and there's
happened quick.
a bunch more coming. But yeah,
What are your thoughts about something like Ethereum, which has practical use cases, or at least should once it's being used more readily?
yeah. So it doesn't, and that's what I'm getting at now. When I say that, without going, I wrote this article. I wrote the article I just talked about, finding signal in a noisy world, because I was asked that question so many times. So I wrote it from a position of first principles, that I was hoping that I would have pushback or a steel man about the other argument against it. That article has been viewed in different publications. I don't know, probably 10 million times. Nobody's pushed back on the foundational principles of that article. So, and it lays out the blockchain trilemma. Ironically, the blockchain trilemma was created by Vitalik in order to try to sell Ethereum, and I used the same trilemma to be able to show how it was impossible. And so the trilemma says in the design space for a blockchain, you can do two of three things: decentralization, security, or scalability. But you have to choose two. So Bitcoin chose decentralization and security, and the way it was designed, still today, more decentralized, more secure every year. But they sacrifice scalability. Why you don't know so much about the payment mechanism being unlimited velocity is because on top of that, and layer two is because they chose something that could only do 5 to 7 transactions a second. So the robustness was the decentralization and security. That was the insight. So the only way to change that is to either copy it completely like Dogecoin, but then you'd be less decentralized and secure. Um, and with the exact same utility, Why would anyone use that long term? Because if they used it, it would fail. Um, or solve scalability at the cost of decentralization and security or security. So if you solve scalability at the cost of security, then it would fail. It would get hacked all the time, like you see in Solana hacks and other coin hacks. So you see this all the time. If you solve scalability at the cost of decentralization, you'd have a centralized high cost database. Why wouldn't you use a database? You would just use a database. You would never use a blockchain. So there is no utility for another blockchain, especially with what's happening on layers. So that in layers you achieve scalability without the cost to removing decentralization and security. That's what I just discussed is really hard to get your first time, and that's why that article will touch at a foundational principle on everything I just discussed there, and leave for your listener to be able to determine for themselves. But that's why it's so confusing. But if you were Vitalik or any of these altcoin promoters, and Bitcoin wouldn't change because of the decentralization and security, and you were early on Bitcoin and you realized you could make a ton of money by creating, at first Vitalik said, a world computer, by creating it, I have to do something different than Bitcoin. And I wanted to first change Bitcoin bigger blocks so that I could make my world computer on Bitcoin. But Bitcoin wouldn't change because that would mean sacrificing decentralization and security, and I couldn't get people to change. Then it would be then it would be really easy to convince people that I had a better Bitcoin. My Bitcoin did something else. My Ethereum did something else without the cost of that. So that's this whole landscape. But I understand why it's really confusing, because most people don't go deep enough onto the tech or the protocol to understand the differences.
Yeah, we'll put that a link to in the show notes to the article, just so people can kind of dive in that really want to learn about this. So, a few more questions here. I know I have to wrap it up soon, but one question that always comes up is, all right, the security is very high, but have you thought about what could um, break Bitcoin? Like, what could cause it to not work?
You you can tell by my answers on this. I think about this often. If when when people so when I finished writing my book, I had a 5% probability that Bitcoin would fail. That's my internal probability that Bitcoin would fail. And what I realized through trying to kill it, through trying to think of everything. So when I hear people say what they think will kill it right now, I almost say, oh, that's cute, right? Because I realized we lived in a system that was almost 10,000 times bigger than Bitcoin, that our actions would make stronger as it divided us. We would give it more power. We would vote left or right. All of those things would steal more money from us. All of those things would be a control system that would try to usurp Bitcoin's decentralization and security globally. And we would be part of that path that made the control system stronger over us by because of human nature, because of fear and greed and human nature, and we would stay there. And so I came at this in every possible way that I can think of, from quantum to this to how many attacks would come after Bitcoin. And what I realized is it wasn't Bitcoin's probability of failure being 5%. Um, it was my lack of knowledge on why Bitcoin would succeed. And so I tried to attack it with everything possible that I could think of, and more probably. And now my probability of failure is 0.00001, something like that. And so, because I realized I am a node in the network, I'm the so as more and more people understand why decentralization and security is so important to not live in a control system and allow the free market to work. And free markets are much more productive than centralized markets. We know that. More and more people would join me and others in fighting for that decentralization security. And they all run nodes all around the world that protect this. Um, and so if you now see the innovation that's happening on top of this and people knowing what I just told you, as you know, you're never going back. You're never going to go back to the other system. And there's nothing that, and as long as people are fighting and protecting this with their nodes and innovation, then it's just going to continue. So that's so I agree with, I agree largely with the fear of that, why people wouldn't do that, but it's misguided, just like it was misguided for me. We're part of, there is no they, it's us. We determine where the future goes.
So I've got two thoughts on that. I just want to run them by you, and then we'll have one last question. We'll wrap it up. So one thing I came up with is the government could tax it 100%, like they do for, I think it was Norway or Finland, one of the Scandinavian countries. They tax cars like 120% tax.
Yeah.
That's one way governments could wreck it. And the other way
And
I came up with was if you think about the financial system centralizes in banks and other financial companies. And I would imagine if the system is built on Bitcoin, for instance, and people are um, using financial institutions. They, like BlackRock, for instance, they are one of the largest financial companies out there, and they exude a lot of control over voting shares on companies. And they could do their own social agenda because they decide they want to, because they're in control of the ETF and they vote. So, and Bitcoin effectively is a voting mechanism if you have enough people who own it, governments, entities, enterprises. So I would imagine that could, albeit unlikely, that could come into play if it was so decided in the global whatever cabal of governments and companies. They decided to do something, they could.
yeah,
So what are your
so every time you say that, remember, you're advocating for the control system, and you're saying, I'm not moving here because I have fear of the control system. And I agree that a lot of people will be trapped in that. They'll be paralyzed with fear because of that fear. But what I'm getting at is there's just too many people that know this now. And game theory alone, like, yes, North Korea can block the internet for their citizens, but they can't block the internet. So, as countries just like China banning Bitcoin mining, it creates an opportunity for countries that accept it. And so there was a massive wealth transfer from China to the US because the US accepted Bitcoin mining at the same time China banned it. And the free market will do this all over the world. And it doesn't care. It doesn't care what piece of paper you want to price the world in. If you want to take Bitcoin price to your piece of paper to price the world, then you can, but it doesn't care. And so it will keep on finding areas that are free markets. And those I think eventually politicians will understand this, and they'll realize I'm either advocating for a control system unilaterally based on theft, or I'm free markets. And the voters will decide in those countries who they punish and who they elect.
well, we all know which side the politicians are gonna fade on. It'll be control.
Yeah,
Uh,
of course. But again, you don't have to wait. The thing is, the more people that move to this and stop giving them their control, you don't have to wait. You usurp their power to steal from you.
So I want to answer one more question because I know we got a hard stop in a minute. So how do we bridge the gap from where we are to where you're advocating? Because this is always the big question: is how you bridge the gap between inflation in a system to deflation. It's not going to be a simple transition, but what is the best way to make that transition?
So they're two different systems acting with almost opposing rules, and you have a choice which system you give your energy to. And the energy, and if you're giving your system to the energy to the system based on theft, then life will get worse. If you're giving it to the system based on just an honest ledger, life will get better. But every single person on the planet now has a choice which system they're giving energy to. The time is a derivative of that choice. So that's the transition. I use this example. It's not a very good one just because the analog isn't big enough. But if you were an executive at Sears from 1995 to 2010, before they went bankrupt, or an executive at Amazon, you would see the world through two different lenses. One would everything was growing, it was getting easier. One, everything was getting harder, it was breaking. Your choice of which company, you could fight it if you wanted to. You could have sat in Sears and said Amazon or the internet will never work, stores are more important, all of the things that you heard people say the entire time until they go bankrupt. um, or you could have been at Amazon in the same and it getting better. Your choice determines what you see. So this is imposing this reality tethered to energy. And your choice, which world you're putting your energy to, determines what you're going to think of it. That's the
Okay,
transition. That is the transition. The transition is determined by us.
great. Well, Jeff, I really appreciate you coming on the show and sharing your wisdom with us. Where can people find more about you and your book?
I would just if you're following me on social media, make sure just go to jeffbooth.ca and make sure it's the social media that it's actually my account. Because I'll always list my accounts on social media and jeffbooth.ca, and there's just too many scammers out there.
Okay, awesome. Well, I'll put that in the show notes. But Jeff, I really appreciate you coming on the show, sharing your wisdom with us. This has been great. I've certainly enjoyed it. And yeah, we'll look forward to having you back in the future because this trend is not going away.
Awesome. Thanks, Kirk.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. Mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room.
All right. Well, that was a great interview with Jeff. Really appreciate him coming on the show and sharing his wisdom with us. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hi, Kirk. Great to be here and looking forward to dancing around this issue.
Yeah, no, looking forward to this conversation. So, what are some of your takeaways from the interview, Barb?
Point one. Jeff Booth was extremely certain about how the future is going to play out. So I appreciate that confidence. I certainly do. I would like to have some of that myself. But I think anyone who knows for sure how the future is going to go is only missing one thing, which is when and how do I make money on it? And those questions were left unanswered.
Yeah, I mean, it's interesting. I love talking with Jeff because I think there are very few people out there that that really embrace the deflationary concept. It's something I've embraced for a long time, and it's really hard to find people that agree with me. Like I've talked to some really, really smart people, names that you know, and I tell them like, we're in a deflationary cycle here, and they're like, no, 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 they're just going to print money. It's going to be hyperinflation, and it's like, I, I'm just not buying it. Like, if we're going to have hyperinflation, we're printing all this money. Why aren't we having it now? Like the math, and this is the interesting part, right? And I'm bringing this up because it's a mental model that everybody can use to understand. I guess I'll call them conceptualists, right? They're people who come up with a concept and they're convinced of it, and we don't know whether it's true or not, right? I'm not saying they're wrong. I'm just saying we don't know because it's the future. It's like, here's what I think is going to happen. Great. I have no idea. I can't predict the future any more than anybody else. So but when you see people like talk about the inflationists, because there's a ton of them out there, we're going to have hyperinflation, we're printing tons of money, we're going to have high inflation, the dollar's going to go to zero, everything's going to go to crap. Like that's kind of their worldview, right? Is that the government's at fault, the Fed's at fault, everything's going to blow up or implode or whatever it is. I think it's really not that simple. I think it tends to be an extremist point of view. It tends to be very hyperbolic, and people gravitate towards that. People like the hyperbole. It's like people who like apocalypse porn. It's like, oh, the world's going to blow up tomorrow. We're going to have a civil war. Like, I mean, that's what sells newspapers. But the reality really doesn't happen that way, right? If it had, then we'd all be dead, right? And so the apocalypse porn, I know it's a theme in movies and all this stuff, but the probability of that happening is so low that's almost not worth thinking about. And if it does happen, it's also not worth thinking about because what's going to matter? You're all going to be dead anyway. So there's really no point in even people who are actually in charge of like the nuke button, they should probably be thinking about that. But for us, it's not going to change our lives. If it does, then it's not going to matter. So I always kind of discount that extremism because it's just not practical. And there's nothing you can really do with it other than freak out, have a lot of anxiety, stress, and maybe get, sick because of it. So there's no point. But you look at the deflationary point of view, it's really not all that common that people think this way. So I really enjoyed the conversation with Jeff because it really opens up a whole nother world of what if. And I wish more people would think about this because if you think of the economic complex, academia, everything's inflation. Deflation's bad, inflation's good. What the Fed's doing is good. It's a bunch of academics patting each other on the back. But nobody's really thinking about like, what if? What if we had deflation? What does that lead to? What are the benefits of deflation? Because if you look back 100 years, we had inflation, deflation all the time, and it was normal. But because we've put our thumb on the inflation deflation curve and said we're going to have small inflation every year, hell or high water, it's going to happen. We've kind of screwed up the economic system. We don't have free markets anymore. So now the signals are different, very different right now. So what would happen, right? So, I think one of the things that Jeff was talking about, and as Barb alluded to, it's like, okay, great, this is a good philosophy, but what does that lead to? So, Barb, like, what are some practical takeaways for average people they can take away from this that they can actually implement or do something about?
I love that question, Kirk, because yeah, when you were describing your experience in 2017 trying to set up a crypto wallet, I was like, oh yeah, do I get that? So I currently write for US News, Forbes Advisor, Investopedia. And recently I've written a series of articles evaluating Coinbase and Kraken, two of the biggest crypto platforms. And when researching for those articles, I looked at a lot of the complaints on sites like Trustpilot on review sites like on the iPhone, etc. And a lot of the complaints revolved around, how do I get at my money? How do I use the wallet? This is, well, let's see, 7 years later from your experience in 2017. So there's not going to be wide adoption if you can't even figure out how to access your money, period. That's the end of it. So yeah, Booth may be using Bitcoin to pay his employees in India, and they may love it. And many people are buying Bitcoin because it has the potential of creating a huge appreciation. Fewer and fewer people are using it for transactions. Will that happen in the future? I have no idea. And when it does, and when it becomes applicable, if I am still alive, which, remains to be seen, well, yeah, I'll get on that bandwagon at that time. Am I maybe leaving money on the table by not putting a portion of my investment dollars in Bitcoin today? Maybe I am. But, I'm not totally unhappy with earning an average of 10% or so on my boring, diversified stock index fund portfolio, which I have been investing in regularly since the early 1980s. Okay, maybe it's deflationary. So maybe a dollar can't buy what it could buy in the 80s. But I'll tell you, my airfare on my vacation last week was cheaper this year than last year. Okay. Counteract that with the food I buy at the grocery, much more expensive this year than 2 years ago. So we do have inflation and deflation. Back to your original question, Kirk. So how do I practically invest? I'm going to break it down for you, and this is so boring, and Jeff Booth will probably think I am a Luddite idiot, but I'm going on the data I have, not on the prognostications of the future. If you want to invest in Bitcoin, in the blockchain, go ahead, but don't do it with all your money. Do it with a portion of your money. And until we have confirmation that there's something better than a diversified portfolio of stock index funds and bond index funds, will get you a ballpark 7% return over the long haul. You take away inflation of, let's say, 3%. That's a 4% return. Okay, it's not 15%, but over time, you can get to a decent retirement on that. And if you can fund your retirement, then you've won the game.
Yeah, it's interesting because while I agree with a lot of what Jeff says, there's some things that I can't square that circle. And he might be correct. I couldn't tease out from him the answers for these. And frankly, I think in many ways it's hard to, because it's all conceptual. But, if you look at the big question is, well, there's a few questions, but if you think about like the Fed, right? The Federal Reserve was created for very specific purposes. And since then, it's been highly inflationary to the economy. Now, some would argue that's a good thing. Some would argue that's a bad thing. I'm not making an argument either way because I don't have the context to make that argument. Now, as a, I have a degree in economics and I know the arguments. Well, inflation causes money to circulate in society, which means that it's putting to more use. So, for example, if there's a deflationary economy, my cash will just sit in my bank account. I have no reason to put it anywhere unless there's negative interest rates, which case I'll put it under my mattress. And then there's no incentive to use the banks, which might be, now Jeff might argue that's a good thing. And I don't disagree. Like banks are not not great in this country right now. And I think if they all disappeared tomorrow, nobody would be shedding a tear. But there are some benefits to banks that that currently are being used. Now, could we have a system where there's no banks? Absolutely. We absolutely could have that system. We don't today, but we could. And I think the challenge with a lot of this stuff is the leap that you have to take. So the argument of get rid of the Fed, like that Ron Paul really kind of spearheaded years ago, is in the Fed. And I don't disagree with that argument at all. However, it still comes back to transition, right? And we have an inflationary economy today. So if we were to transition to a deflationary economy, basically what you would see would be an asset price implosion. Now, when you typically have a recession or a crash, it's called a deflationary crash or recession. For the reason is that we've had so much inflation. If you think about it this way, like if you think about, and I try to use this imagery for people, is imagine a balloon. Okay, let's say 1980, there was this balloon, right? It's just the size of my fist. Okay, and from 1980 to 1990, that balloon went from the size of my fist to a much bigger balloon, right? From 2000 to 2025, it's gotten exponentially bigger. You got this massive balloon, okay? Now, think of that as that balloon size as the size of the economy, okay? Inflation allows this balloon to get bigger. Deflation shrinks the balloon, right? So let's say you got this balloon size of a watermelon, or let's say a basketball, right? The size of a basketball. And then we have a crash like 2008, right? The markets went down about 60%. But let's make the math easy. Let's say it was only 50%. So now this basketball size balloon goes to half that size because virtually everything dropped 50%, sometimes more, but let's say it's 50. So now the economy is half the size. Now, if you have an economy half the size, it means everyone's wealth is half the size, which means everything is shrinking. So all the increase in size we've had from this fist-sized balloon up to a basketball or this exponentially larger, what we'll call it like a beach ball, you have this exponentially larger economy. People feel good because of the wealth effect, because now they have more money, they can spend it on stuff. And yes, it costs more for that stuff, but most people with money get wealthier and they're happier. People without money are basically left behind, and now you have this inequality gap, this wealth gap between rich and poor, and it's causing social friction because people with are like, whatever. People without are like, hey, I want your stuff. It's not fair. Like, yeah, of course it's not fair. Blame the Fed. Don't blame wealthy people. They just knew how to play the game better than you. If you don't have money and someone else does, it means they know how to play the game and you don't. Right? That's just the truth of it. I'm not blaming everybody. I'm just saying there's a game out there. If you know how to play it, you can get really wealthy. If you have inflation and you buy real estate and you leverage it up and you take as much debt on as you can and there's continuous inflation, you're going to make a crap ton of money. It's a lot of risk, but you're going to make a lot of money, right? Real estate is one of the biggest factors to cause wealth. And the main reason being, outside of the tax benefits, which are quite nice, one of the main reasons is you're getting massive leverage. You take $100,000 and you're commanding, $500,000 to $1 million of real estate. That's massive leverage. You can't do that in the stock market. You did in before it crashed in the Great Depression. That's what people were doing. They're taking like $1 and generating, commanding $100 with it. It was crazy. And then they instituted rules to stop that. Even Forex, you could do 100 to 1 up till maybe 5-10 years ago they stopped that. But you were able to take $1 and command $100 on the Forex market. Crazy. You could lose a ton of money. Like 1% move wipes you out completely. So when you think about these dynamics, you have to understand that, yes, it's nice to think about ending the Fed, but then what? Then what's going to happen, right? And what's going to take its place? So some people say, well, nothing has to take its place. Sure, nothing will take its place, right? We live in a perfect world where people are perfect and they don't command power and they don't want to take control of other people's lives and they don't want to make more money. Sure, we live in that world, right? We don't. So wanting this perfect solution is great, but any solution that you come up with cannot counteract human nature. And this is one of the big problems with public policy, is that people want things and they decide we're going to do it even though people don't want it because it's for the greater good. The problem is if it goes against human nature, it's inevitably going to fail and lead to distress and misery. Now, if policy aligns with human nature, it's much more likely to succeed. It's like the free market. The free market goes along with human nature. That's why it works, right? It allows two people to interact with each other, negotiate with the best deal that they think is the best deal. It's a free market. Now, somebody says, well, the price of milk is $2. Now, really, it should be $10. Well, now you've got a problem, right? Now you're not going to have any milk. Or what if it should be $10 and really they're saying, well, it's $100. No one's going to buy it. Now you got a glut. Because human nature is leading you to do the right thing for you. Even though the government says you have to buy milk at $100, you're not going to buy milk because you don't have any money. So you have to align policy, and I'm using policy in air quotes, with human nature, or else it'll fail. This is policy. Like, get rid of the Fed. That's policy, right? Or whether there's a Fed or not, that's policy. Whether you're using inflation or deflation, that's a policy. You have people in charge that are basically commanding the policy to do a certain thing. And, I can tell you if they stopped printing money, we would go through a deflationary spiral because we've set that up. We've caused it. And now I think it's irreversible. So we will have a deflationary spiral at some point. Who knows when it'll happen? Maybe they'll hit hyperinflation before that happens. I don't know. I just know it's not going to be good. It's going to be messy. It's going to be a problem. No one's going to want to do it, right? It's like saying, "Oh, I can cure, I can get world peace." But, 75% of the world has to die to get it. Is that a good solution? Who agrees with that? Raise your hand. Who thinks that's a good idea? Let's kill off 75% of the population to get world peace. That's a terrible idea. But would it solve the problem? I mean, let's say hypothetically it did. I mean, look at Sam Bankman-Fried. Barbara and I were talking about this before the show. Sam Bankman-Fried. He had a philosophy which is I flip a coin and everybody dies, or if it's tails, and if it's heads, the world's twice as good or 3 times as good. He'd flip that coin every time. I would never flip that coin. That's a terrible decision. But some people think that's a good decision. I don't know. Maybe they're right. I mean, it's a philosophical question. I would entertain the philosophical question, but would I do it? Probably not. It's just me, right? Everyone's got their own thing. But anyway, I think it's really important to not be extremist in your worldview, right? It's important to entertain these ideas because it makes us smarter. And maybe Jeff is right. I mean, like I said, I agree with a lot of his worldview, so I'm nothing against Jeff. But I think when we think about these things, we have to think about the unintended consequences, and are we willing to do them? And if we're all collectively willing to do it, okay. Japan was collectively willing to entertain deflation, and they did. And their currency's a mess, but in many ways, their country has gotten better. There's going to be a currency problem at some point, but basically their economy's gotten better. Like, their companies are really strong and solid and on good footing. There's a lot of benefits to what they did, but it's messy. It's not easy. And in many ways, they should probably just, reset their currency and start again. But that would be a disaster. But the point being is you have to understand the unintended consequences. Now, if you're collectively willing to do it, it's a great idea. Like, anything society agrees on is generally socially acceptable, right? I mean, that's the definition of it. So if it's a good idea and people get along with it, then let's do it. But you have to entertain the fact that there are intended consequences, and people are going to get harmed, and people are going to lose money, and they're going to be unhappy. And if we're all willing to do that for the sake of the greater good, okay. Who am I to judge, right? So I think it's just really important to think about these things, because these big ideas, albeit they can be really good, they also cause usually a lot of distress to get there and a lot of pain. And if people are willing to do it, great. But they just need to understand that it's not a one-sided thing. There's always another side to it. There's always repercussions. There's always unintended consequences that happens with these things. And this is what I can't square. I would love to say deflation's good, and I agree with it in many ways. However, I also know there's another side to it, which is not good. And people will never accept it. It's like if a president ever got up there and said, here's the best thing to do, everyone's going to experience a lot of pain. You're all going to lose a lot of money, but we're going to be better off on the other side. That person would get kicked out of office so quick. I mean, look what happened in the UK. What was that woman's name in UK, Barb, that got basically ousted because she said something like this? Theresa May, was that who it was?
Right, right. I was just thinking about Brexit and where everyone voted for Brexit, and then the next day they saw they're out of the European Union, and they're like, I didn't sign up for this. I didn't know it meant that we were going to be on the outside when the rest of Europe is on the inside.
Yeah, I think a lot of that was PR. I mean, people are like, oh, I didn't know what I was voting for. Like, yeah, you can always find some rube to say that. And there are probably people who were just like, wait, I was drunk when I voted. I don't understand what I do. But you know, I'm not going to judge Brexit because I don't live there, but I know there's definitely two sides to that. But if you think about it, it's like no one wants the bad outcome, right? We all want to party like it's 1999. Like everyone wants that. No one wants bad times. And because we haven't had bad times in a long time, now COVID people do remember, but that was bad socially and psychologically and many ways, but not necessarily in economically it was, but there were also a lot of people that benefited economically. So it was kind of it was a little bit of both. 2008 was rough on everybody. Most people don't remember 2008. They also don't remember the tech bubble bursting. They also don't remember a lot of things in the past. And I think that's a detriment. I was just listening to a podcast and they were talking about who was it? Annie Jacobs or Jacobson, who wrote the book Nuclear I think it was Nuclear War, a Hypothesis or something like that. Anyway, I've heard her twice in podcasts. She's brilliant. She just talks about like, back when the Cold War was happening, everyone was afraid. And the populace didn't want a nuclear war. Everyone was afraid. But now, like our government's talking about launching, like strategic nukes into small areas and it'll be okay. No, it won't. There's nothing about that that's okay. And somehow our policymakers think that's okay, right? But the point that I'm making is it's not whether it's okay or not. It's that we are so far removed from the threat and the reality of what that means. There's so many people who are just like, yeah, I'm sure it'll be fine. The government knows what they're doing. But we haven't had these public tests that we've seen. People don't remember Hiroshima and Nagasaki. Like it's out of the public like psyche of like what reality is. And when you get that far removed, that tends to be when things happen again because people they disconnect from it. I'll give you another example real quick. I was at a dinner years ago, and there were people all over the world, and there was this couple from Germany I was sitting next to. I was just talking to them because I love Germany. There's interesting people and interesting culture, and I was talking to them. I'm like, so, what do you think about like how has Nazi Germany impacted German culture today? Like, how is that is that still impacting you guys? Because I know that was obviously a big, black mark on your country's history. So like, how is that impacting? He's like, it's interesting because every time it comes up, we always shy away. Like the populace, like you bring up like Nazis, they're like, oh, you're right. Sorry. Like even whether it doesn't matter, like they'll stop the argument and they'll like cower because they definitely do not want to be associated with Nazi Germany. However, the point that he made was he said, look, there's a younger generation that's coming up now that had no connection to that. They don't care. They're just like, screw you guys. And almost he didn't say this, but he was almost like some of them kind of they're more leaning towards that. Like maybe it was the right thing. Like and it wasn't that the younger generation's stupid. It was just that the point he was making was there's a huge disconnect between before and after. And after it's like whatever, Hitler, he was an idiot, like whatever. And they totally disconnect from the idea that was actually a huge problem and they don't want to go down that road. And the point he was making was like, look, the younger generation is actually they have a path that is in that direction. And it's not that bad, but they've kind of taken the yoke off of, hey, Nazis are bad, and they're just like whatever. And so I think when the point is when you get too disconnected from an event or a reality, you tend not to value it. So it's been a long time since we've had a crash. And there's a whole generation of people who've never seen one. They don't know what it's like. They just think the markets always go up. That's a problem. So, I think that construct leads to a lot of different frameworks, not just investing, but the investing world is really important. If you've never experienced a crash, you've never experienced a recession or the Great Recession, which is basically depression, but they didn't call it that. If you've never experienced that, how do you know how to act? You can read books, but it's not the same. You've never experienced it. I've experienced a few of them: the tech bubble, the housing, the Great Recession, the COVID. I've seen it a bunch of times, and it's all similar. When you see it, it starts to map onto each other. You're like, oh, yeah, we're heading this direction. So people that are around for a while know, but people who haven't, they just haven't experienced it, and they just think, oh, it'll be fine. I'll just buy and hold. I'll wait till it comes back. Yeah, good luck with that. What if it takes 10 years or 20 years? Look at Japan. It took 30 years to come back. Yeah, I'll buy and hold for 30 years. That's a good idea. I don't know. What are your thoughts, Barb? Doing too much talking today.
What are my thoughts? Where do I begin, Kirk?
I don't know, wherever you want.
You've
At the beginning.
covered a lot of ground. But let's start with the present, okay? There are so many things that we can worry about that will go wrong in the future. And we call that uncertainty. The future is totally uncertain. Nobody knows what's going to happen. The only thing we have is the past. And like Kirk mentioned, if you're not familiar with the past, you're operating at a disadvantage. Because although the future doesn't exactly mirror the past, so far, especially in my investing lifetime since the early 1980s, there are a lot of similarities between the past and the future. And so it's a really good idea to understand things like in the early 80s, mortgage rates crept up to 13%. So you're whining about a 6% interest rate? Okay, granted, housing inflation, housing prices have gone up, and a 6% interest rate hurts a lot more than a 3% interest rate, but there are times when it has been worse. Currently, we're at about 3% inflation rate. In the 80s, we had 10 plus inflation rate. So we had, I'd say late 80s, early 90s was when the internet was really starting to be adopted by everyone. Now, I ask you, who could predict in 1990 the companies that would be at the top of the heap in 2024?
Yeah, it's interesting. When you think about another thing I liked about what Jeff was saying is, and this is where I align with his thinking, is that for years, I've struggled with this concept of the government's printing money, banks, Feds, whatever, they're printing money. And everyone's like, oh, it's going to lead to hyperinflation. I'm like, yeah, but why isn't it? And it was always stuck in my mind, like, why isn't it? And the only thing that kind of really squares that, because reality can disconnect from people, what's going on can disconnect from reality quite a bit in the markets, but it doesn't forever. Eventually comes back down to earth. And there's this whole concept of reversion to the mean, where it goes extreme in one direction, it tends to go extreme in the other direction to bounce back. And so what's interesting is the deflationary concept, right? Technology is deflationary. Globalization is deflationary, right? And if you think of demographics, like aging population, is deflationary in general for most countries, not all countries. But if you think of those concepts, and if you think of this is how I try to explain it to people, it's like you think of those concepts, right? On one side, you got these deflationary forces, very strong, right? On the other side, you have inflationary forces printing money, right? Now they balance each other out, right? They're offsetting each other, like two forces pulling in opposite directions. And in the middle, you kind of have this balance here, and it ends up with like, up, inflation's leading a little bit by 3% or 3.5 or whatever it is today, right? So it's like, all right, we're getting 3.5. And then all of a sudden, deflation starts to pick up, and they're like, oh, we got to print more money, right? So we got to keep it at that 3 level, right? If you think of it like this balance beam, that's how I think about it, right? And so if you think about these forces, like when there's a highly deflationary force like 2008, that took over, right? Dropped 60%. Well, they couldn't print enough money initially to do that. Eventually they did, and it recovered, but initially they didn't. It's just like, oh, sorry, we messed up. All right, let's get back to balance. And then COVID happened. Oh, sorry. All right, went off. We'll balance it back out. And I always think about it that way. It's just this seesaw back and forth. And the government tends to, with their printing of money, they tend to try to balance it with printing money. And occasionally we have an outsized event, which is like, oh, sorry, we'll fix it again. But I think of that visual because that's basically what happens with the economy. It's like everything's kind of balanced, and they try to balance it. They're 3 or 2, wherever they're trying to hit. It's a boggle where they're trying to hit. But anyway, but they kind of balance it until this event really kind of like says, well, we'll fix it. And I kind of feel like we're at the point now where they're feeling pretty comfortable with it. And I think higher interest rates is what we needed for a long time. But the fact that it's holding, it says something, right? The fact that they're printing money, and we'll get into that in a live episode on Friday. But they're effectively still printing money subversively. But and then they got high rates, which is kind of muting that. So they're trying to balance it all out. And so the real question is, if that's happening, we're printing trillions, like $1 trillion every 90 days or something crazy. If that's happening, those deflationary forces must be really, really strong, because that's the balance, right? Because if it wasn't balanced, we'd have hyperinflation, right? For all the money we're printing, but we're not, which means the deflationary forces are really strong. So this negative demographic, aging population. You've got tech, which is increasing at a rapid pace right now. You've got globalization, which is actually reversed, which is, in my opinion, why inflation has picked up, because globalization is reversed. Instead of outsourcing our inflation to Asia, we're not reshoring it, but reshoring some of it, but it's not as cheap, so things are going up. So we're getting some inflation because of that. That's offsetting it, but technology must be really strong. Because the demographic thing, it's slightly negative because we're a little bit below where we need to be for replacement human value of people in this country. Plus, you get immigrants coming in, and that's repopulating it. But it's got to be really. I mean, and here's the thing. I'm going to put on my tinfoil hat. I can't reach it, but maybe Friday. Here's the tinfoil hat. We're seeing, what do they say, 8 million new immigrants illegally come across the border in the last few months. I don't know what the numbers are, but it's the number I heard. Let's say there's 8 million, right? The fact that they're doing that, maybe they're trying to fill a hole, a deflationary hole. Oh, we're losing too many people. We need to fill that hole, right? I'm not saying it's the right thing to do. I'm just trying to hypothesize, right? If you think of these buckets, right? Globalization, you've got the aging population, or the replacement value in this country, and then the population problem, and then you've got technology, right? And here are those buckets. How do you fix those deflationary buckets? Well, you stuff the population with new immigrants. That's one way to do it. How do you fix the globalization? Well, you figure something out, and maybe you find another cheap country to outsource it to. But technology you can't change. What are you going to do? You're going to be a Luddite and break all the machines? Like, how do you fix that? I don't know. But I did like the way Jeff framed it, and I do think that I think the future is interesting. I'm not sure if his worldview is the right one or not, but I do think it's really interesting. And I can't think of an example. The closest thing we have is Japan, and I don't think that's a great example, but that's the closest thing we have to a deflationary environment. But if the whole world doesn't participate, then it doesn't work. So it's an interesting thought experiment, and I'd love to be able to square that circle, and it would be difficult to try, but it would be very interesting for sure. So Barb, as we kind of wrap it up here, final thoughts from you.
I would like to know what the investments are of the future with certainty. because then it would be super easy. You just invest in the companies that you know will be the winners in the future. Thus far, I don't think anyone knows that for a fact. So how do you take the knowledge that we are definitely at a change point now with AI and with blockchain fundamentally changing our entire lives? Again, akin to what the internet did decades ago, although many people say even more significant. The problem with acting on that is just like we didn't know with the internet how it would affect us 20, 30 years later. We don't know how these new and quickly evolving technologies and systems are going to affect us in the future. So what do you do? How do you use this information? Now, you can be an early adopter and say, very clear, I am going with blockchain companies. I know some of them are going to fail, but I am on that boat. And I'm going to do it simply. I'm going to invest in an ETF that owns blockchain companies. Super easy way to go. Or crypto is going to prevail. I don't know how, I don't know why. I'm going to put some of that in my portfolio. So that's a way to kind of hedge your bets over the changing, should I say, environment that we're in now. But fact is, we don't know who's going to win. We don't know who's going to lose. We don't know how things are going to play out over the next decades, how quickly and in what way. So the only things we can do is understand the past, understand the changes that have occurred, and be aware. And for now, I know this is super boring. I said it earlier in the podcast, but for the past 100 years, investing in a diversified portfolio of publicly traded stocks has done pretty well. We don't know if that's going to be the case in the future, but we also don't know anything about the future. So my advice would be, don't glob on to one idea or one person and say, this guy or gal knows what's going to happen. I'm going to hitch my horse to them. But do your research. Keep aware of the changing environment. Invest small amounts of money in what you believe are the technologies of the future, but also don't forget what has worked in the past for decades. So I am Barbara Friedberg. You can find me at YouTube and also at Barbara Friedberg Personal Finance.
Yeah, thanks for coming on the show, Barb. Yeah, and once again, thanks, Jeff, for coming on the show. Really enjoyed the interview, and I've still got tons of questions, and we'll probably be dipping into this topic more as we go, because the direction that the economy is going right now is not healthy. So I think it's always good to talk about both sides of the equation. So we'll be getting more into that, and certainly be talking more about Bitcoin, cryptocurrency, blockchain, all of it, because that seems to be where things are going in technology. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.